Good morning and welcome. Thank you for registering for our 7th webinar delivered during the coronavirus pandemic. It's 10 a.m. and it's Wednesday, the 17th of June. My name is Jane Pendlebury. I'm the CEO of HOSPA, the Hospitality Professionals Association. This week, we have seen the reopening of non-essential shops, and soon we will begin to see the reopening of hospitality proper, or as proper as it can be given social distancing and the overriding risk of COVID-19. It's not as straightforward as that. For some hotels and some restaurants and even pubs, the cost of reopening may be higher than the potential revenue. So when to take the plunge? And if you do decide to reopen, which elements within the venue should you reopen? I'm delighted to be joined today by two of our board members, Michael Heyward and David Bridge. And also we are lucky to be joined by Michael Grove from Hotstats.
Morning, everyone.
So with the views of a revenue manager, an asset manager and a benchmarking expert, we are well placed to have a discussion focusing on profitability. We will open up to questions from the audience following an initial debate, so please keep the questions coming in. There is a tab on your GoToWebinar app, so if you just pop them in there, I'll be able to address those to the speakers towards the latter part of today's webinar. Thank you for joining us. I do hope the next 60 minutes will be beneficial to you all, and I'm now going to hand over to Michael Heyward to kick us off.
Thanks, Jane. I've been really looking forward to this discussion, and in our build-up towards today's webinar, there has been quite a bit of discussion amongst the three of us on this topic, but I think everyone who's on this webinar would understand that it is a really broad topic. So we're going to make a few assumptions. First of all, our audience is quite well informed, is industry professionals, so we're not going to go into a lot of detail explaining things. We are going to make quite a few assumptions about the level of knowledge you guys already have. If there's anything we skip over too quickly or you think needs explaining, as Jane said, just use that chat to be able to put the questions in there. So moving on to how have we approached this and the timing of us now in the middle of June to be looking at this. So confirmed by our Prime Minister, Boris Johnson, the government is still working towards that 4th of July celebration for hospitality of when we can reopen our hotels. There are a few things we know about these kind of plans and announcements, however. First of all, we know that date could change at relatively short notice. We've seen other industries impacted by some changes over recent days, including schools and dentists and other businesses. We also know there are likely to be differences from place to place across the UK, particularly looking at the devolved nations. And we also recognise that as we move further into the release from the lockdown, there are risks of local areas going back into lockdown off the back of test and trace. And that's certainly what we've seen in other parts of the world when they've started to relax the lockdown. So that is our starting point. That's the framework. We recognise this is all going to be fairly fast moving, and there are at least as many opinions as there are people in any discussion on this topic, if not more in our case. So I thought we would start off getting the asset manager's view, David. When do you think it is the right time to reopen your business after you're allowed to? Straight away, or is there more nuance to that decision?
I think basically you have to look at it actually at every individual property. I mean, for a large convention centre at the moment, there's very little point in reopening, particularly if you have a lot of business from overseas. We've still got the 14-day quarantine, and while that lasts, it's going to be an issue. London properties are going to struggle. I mean, they're desperately trying to get the government to change their minds on the quarantine. And that's a bit of a key. But I mean, I think some of the provincial properties are quite looking forward to having the opportunity to start. For them, the season has already commenced and that they can open. I saw a talk between Danny Peccarelli and Andrew Stembridge, where they were talking about their properties and the opportunities, and places like Newton Glen, where 80% of their guests are from the UK. There's an obvious opportunity there. There's an opportunity, although Ryanair is saying they're going to be flying to the rest of Europe, but there's going to be a lot of people that will not want to venture overseas for fear of being caught in some kind of quarantine or shutdown. So there's going to be a lot of frustrated demand, which will be hopefully caught in the UK, probably in the provinces rather than London. But so really it's, everyone will have to go through their property, they'll have to look at their property, they'll have to see the benefits of their property. And then when you determine what you can reopen, it really depends on what the government saying, can you actually open the restaurants with social distancing? What can you do with your meeting space, etc. And of course the social distancing impact as well. I mean, I suppose the way I look at it is I try and assess the potential of each property, and the potential is really from the market segments it's already serviced. So if you've got a lot of local business, a lot of leisure business, you're probably going to pick up slightly more quickly than if you've got a lot of corporate business. And if you're meeting business and weddings, you can probably slide that off to the next year. So asset by asset, property by property. And then I suppose the other point I'd like to make is you have to actually empower the people on site to make those decisions. So you've got to kind of have a strategy in place that you all tie into, but then you give the actual local people the power to decide, because all of this is local, as you've already mentioned.
So we've got some figures from Mike there on the screen, looking at profitability and how long that takes to recover compared to the TRevPAR. Do you want to just talk us through that one, Mike?
Yeah, sure. Can you see the slides now? Just checking.
Yep.
Yeah.
Okay. Yeah, sure. So I mean, I guess the default starting point for all of us is naturally to go back to look at historical events and try to understand from those, in terms of fact and numbers, what recovery looks like and how how we can possibly look at the future. It's this normal process of forecasting to obviously backcast. And what the history shows us from two of the key events here we've looked at from the UK. So the orange line is the TRevPAR and the blue line is the GOP. You can see how quickly UK wide the TRevPAR returned. So you're looking at just over 3 years from 9/11 and 4 years from the global financial crisis. But from a profit point of view, the period was actually double that. And this is UK wide. Very important to understand. I think this will be a constant topic, and I keep reminding people whenever we try to generalize too much that London recovered a lot quicker than the rest of the UK. The provinces were still struggling for up to 10 years after the GFC, and London recovered in some circumstances and some asset classes between 18 months. So I think that there is a lot of variables within this. But yeah, looking at the numbers here, you can see this is actually showing 12-month moving average. So if you've seen these graphs before, we've showed it in different versions, but this is the point in time in which the 12-month moving average reached the same level as it did pre-crisis. So at any one point in time, you're looking at a 12-month. Now, this again is of course looking back to recovering to the pre-crisis levels. What we're in a situation of now is that we've dreamed of how quickly we're going to get back to that. Right now, it's of course the focus on getting back to profit. Now, this one we obviously had a bit of discussion prior to the to this webinar. I think that this one was an area David was quite excited about, in the fact that as much as looking at these previous events is important, and you can see the scale here that up to 25% drop in GOPAR on the 9/11, the Iraq War, and 30% global financial crisis. But you can see the current situation is is totally out of scale with everything else, and for that reason, I think me and David are both on the same page that this looking at history is not totally useless, but it's really not a great reference point right now when trying to predict the future.
I think the only interesting thing would be when you look at the recovery in TRevPAR and the recovery in GOPAR, I suppose the only interesting thing would be to study why GoPar recovered so quickly and what was the actual potential to recover more quickly. Were there things that actually happened that actually held us back? I think from a personal point of view, I think it's a little bit confusing when you look at TRevPAR. You really ought to look at activity, so occupancy, restaurant activity, etc. And I think last time, from what I remember in the hotel I was looking at, it was the occupancy that built, then it gave you the opportunity to grow the rate, and then suddenly the corporate traveller was back, the meetings business came back, we got the incentive business back, and that gave us the opportunity to actually start making an awful lot of profit. But it was all because there was activity, and I think that's the key. We've got to see that activity, and we've got to drive everything to create that activity. And that's what I would kind of recommend to any owner that would ask me. You know, the importance is to be active, to be out there, but not in cases like convention centres where, you know, until things do, you know, until the quarantine and international business improves, there's very little point. So it's really starting off segment by segment and building, but starting.
And perhaps we can move on, Mike, to looking at some of the costs that come into the consideration and the impacts beyond just hotels.
Yeah, sure. So I think that, you know, we've been quite inward looking as an industry. You know, of course, we're in a very, you know, difficult situation. We're being impacted way more than pretty much every other industry globally. And if you just look at the UK in particular here, we ran some numbers this week to provide for various different sources, actually. Now, it's always difficult to provide UK total industry wide because we obviously have a fairly substantial sample in the UK, but we need to then extrapolate those numbers to take in consideration lots of types of properties that we don't necessarily work with. But from a revenue point of view, you're looking at over the 2 months, year on year, we're looking at up to £4 billion worth of drop in revenue, and in profit terms, that equates to about £1 billion a month to owners. Now, of course, that, you know, is one side of the coin, and of course, you know, within that you can see what looks like almost a 50% flex from a cost point of view. But those cost savings, of course, impact stakeholders of the industry. And whereas our priority, you know, as hoteliers is to protect our hotel profits, you look then to the stakeholders, and you can see here quite widely hit. The laundry companies looking up to 36 million worth of loss from revenue point of view. The F&B suppliers being hit dramatically because, of course, the laundry suppliers in some circumstances or many circumstances are still able to actually provide services to hotels that are still open. But from an F&B point of view, it's almost redundant at the moment. The utility providers, again, still providing some utilities to the hotels, but that drop in spend has of course impacted them from a revenue point of view. Travel agent commissions, certainly an area that, you know, the likes of the OTAs and the GDS providers are being hit dramatically from their fees. And from the employees and the government support, of course, the taxpayers' money is, of course, within those 2 months, you can see there up to 700 million of payroll that has been either supported or lost out of the pockets of employees. So again, some dramatic numbers and good reasons why we should want to get this, and everybody wants to get this industry kick-started again.
Mike, what about the poor operators? What about the brands? I don't see them on your list here.
No, I mean, this is a tough one to kind of display. I mean, we don't benchmark or share information on fees and you know, and the loyalty programs, etc. From directly from the operators. But of course, yeah, there's all of those angles need to be considered as well. There are loss in profits from everybody here right now.
But I think with the fees, we can play with percentages on hotel revenue because a lot of those fees are based off that anyway. And as David was saying before, you can look at that from a property to property basis. You need to understand the impact on fees. But just coming back to David's earlier point, how, and a lot of what we've been bouncing around between the three of us, how do you actually make that decision on when is the right time? David said if you've got a convention hotel, it's going to be quite a while down the track before it's going to stack up. So from a revenue management point of view, one of the things I'm wanting to get from benchmarking, from finance, from asset manager, what kind of occupancy do I need to feel like we can deliver before it makes good business sense to open a particular hotel? Could you show us maybe a bit around the occupancies and the break-even points?
Yeah, sure. I mean, you may have seen this chart. We presented this a few times, certainly to the investment conference a few weeks ago. And the kind of talking point really here was around the fact that luxury hotels, based on our data and quite a fair bit of data science, you can see here that the luxury hotels break even on the way up quicker than the competitors in asset class. So whether that is the full service or select service. Now, of course, this that spears some conversation, because there is some logic that luxury assets are priced at a premium level, and therefore will in theory can hit a profit level quicker than the others. There is also the flip side of that, of course, which is that they run a much fuller operation, and there's a lot more kind of meat on the bone as it is to be able to service their guests. And I guess the third factor to consider in this, and of course this is a mix of all three of these, is the ancillary revenues and the TREV pool, as it is, which I think is a very important KPI right now. We're very focused on available rooms, but it's how much, when you get a guest, how much you can get from that guest in its entirety. And for luxury hotels and full service hotels in particular, in certain of the parts of these parts of the world, you're looking up to kind of 50% of the revenue comes from outside of rooms. So if you're only opening the rooms operation, it does deserve another type of analysis. And again, looking at a macro level, this is very different to looking at it on an individual asset or even an individual market point of view. But you can see here that you're looking at total UK. So if we were, sorry, I think you've lost the legends there. Just check that you can see.
No, it's there. It's visible.
There, is it?
Yeah.
Okay, fine. So basically, the blue on the left-hand side, anyway, is the rooms only. Is the full service operation, and the right-hand side is rooms only. And I think that really identifies. You look at the difference from a luxury hotel point of view. So if they were only opening with bedrooms only, or with a very small food and beverage operation, and missing out the revenue that comes from conference and events, from wellness, from golf, from all of the other areas of the business, you're talking 43% occupancy before you break even, which is a real big gap between with or without ancillary revenues. From the full service, and that really explains the combination. It's not ADR. This is and it's also not necessarily the full cost base. This is about the TREV pool. This is about the ability to maximize the revenue you get from each guest, and that's evident there in the full service scenario, where you see not such a big gap, and a much higher break-even point. And again, that is the volume of TREV pool that they're able to compete with the luxury segment, in comparison to what is quite a high cost base compared to the select service segment. So you can see that the break-even points make sense. Now, this model, like I said, macro level, it looks different between regions, and this is focused on the UK. I really recommend to look at this type of model. I'm sure everybody is, to understand from your historical data what levels are and which areas of the business are possibly loss-making. The select service part of it, at the bottom, you see it flips around. So when it's rooms only, when you're looking at rooms only, it's actually more profitable, because those ancillary revenues that the select service segment are capturing actually are loss-making in many circumstances. So to be able to provide that service to the guests, albeit fairly small.
Mike,
anything to add on that? Yeah, sure.
Yeah, just a quick question. Would you go to Chewton Glen if you couldn't go to the restaurants and go to the bars?
I think this is the point. We need to be quite creative with it. If the restaurant is closed and the bar is closed, you'd like to think that there is,
the reason I go to these places to actually meet up with others and go to the bar, sit in the restaurant, have a family meal together. You know, the pig is another area I'd love to go to, but really to meet with others. If I can't imagine I would just go there and stay in a room and pay a premium price just for a room.
No, exactly.
Well, I think you've also been talking before about the M&E, or the meetings and events business there as well, David. If we're not bringing in the meetings business, because there's a well-run meetings business, there's good profit on that. But there was an interesting webinar recently with Heather Hart and Jonathan Liu and a couple of others, where they were saying there may be some additional opportunities that we haven't had before, where you've got corporate offices that have got in-house meeting space, but it's quite small meeting rooms, where there are now quite a few of those that are wanting to have larger meeting rooms, and they don't necessarily want to bring the clients into their offices. They're happy to go into another space that they can use where they can have more space. So there may be some new opportunities out there that we haven't thought of before. But
what rate would they sell that space?
Well, yeah.
Would be, you know, normally you have a rate per delegate, you can charge a lot. But if you suddenly say instead of 100 delegates, I can only have 30, or in this case, maybe it's only 10 people instead of 25, you know, how do you adjust the rate?
Yeah, well, I think the starting point is to understand what opportunities there are, and then to get into how do we make the economics of it stack up.
Mm-hmm.
I mean, having this picture on what do we need to achieve if it's just rooms. Now, most of us would expect, at a very least, you're going to be providing room service, even if you aren't yet. And even the hotels that have been open to essential workers, they've been providing breakfast delivery to the room and that kind of thing. So knowing where those gold dots are on the screen there, that's what we have to achieve if it's just room revenue. And then we can come down off that as we can provide other profitable revenue streams to improve the situation. I think that's already giving us a bit more fact base on which we can make the decisions. Right,
Yeah.
You had my favourite one coming up next, I think there, Mike. What was the next one you had? So this is coming down to which parts of your business do you open? This one needs a bit of explaining. I think I'll leave that to you, Mike.
Yeah, sure. So, I mean, you know, this is a hot topic of discussion right now. You've already seen in the press this week that there is a fair bit of discussion around, you know, the distancing and what that means to businesses. Because, of course, it's not about maximising the space for many businesses. This means that they literally can't use the space because logistically it doesn't work. And of course, this is, you know, when you do this on an individual asset level, this makes a lot more sense. This is one of the slides that I think really makes a lot of difference. I know there's been a fair bit of work being done here already to consider already the fact that you're not looking, when you talk about 2 meter distancing, you're not talking about 2 meters distance. Actually, you're talking about 4 meters because you're 2 meters in front, 2 meters behind, and right the way around in a circle. So the gap between people, when you talk about that space that you can use, is a total of 4 meters, of course. And that's why we're looking at diameter here. So in theory, the left-hand column there is your 2 meters. The next column over is the 1.5. Then 1 meters and then 0.75 meters as the kind of options that are on the table.
Mm-hmm.
And the impact from a revenue point of view, you know, if you consider the restaurant to begin with, the way we've run this is we've looked at the pre-COVID guidance on spacing in the various different types of operations. So in the US, actually, there is by federal law there is actually guidance on how close people should be sat within a restaurant pre-COVID because of evacuation procedures and these kind of things. And then we took a few figures from various consultants on a global level, which almost matched identically with what the US were providing. I'm guessing that's how the US initially sourced those figures. So from that starting point, and then taking the Hotstats data to understand, how hotels are on a macro level are performing in the various outlets. You're actually able to then model what that means from a revenue point of view. We've excluded room service from this right now, based on the fact that we believe room service won't be negatively affected, in fact quite dramatically positively affected if we do it properly. But from a restaurant point of view, if you imagine, as things are currently set up, you're not normally seating people within 1 or 2 meters away from one another anyway. So the impact from a revenue point of view is a lot more minimal than it would be from a theatre style operation in C&B, or of course a bar area that is quite heavily populated and people are standing next to one another. So you can see what this is actually presenting to you, and I should clarify this because I clarified it with David when we were talking a few days back, is that the bar is actually showing you what your potential revenue now is. So you can, on the right hand side, you see here with the 0.75 meter distance in the restaurant, you're looking at 76% of your revenue you should still be able to achieve. Now, when you look at from a the key one really is the end result at the bottom. So on a 2 meter distance, we've calculated you're looking at about 7.7% of the revenue on a macro level. Some hotels will be able to do 50%, I'm sure, but for some they will be obviously won't be able to do anything. So this is the average of those. From a 1.5 meter distance, that jumps up to 13, so still not a massive amount. And you can see the difference if we get to 1 meter distance, which is 31%. Still not great. It still means that there are significant losses, but it's a lot better than the 7.7%. And like I said, for some businesses, they'll be able to operate.
So one of the things we were talking quite animatedly about is the difference from one property to another. So in my past roles that I've been in, I've worked with mid-scale groups of hotels right across the UK, and quite a lot of our hotels would have these enormous restaurant spaces which are just perfect for Sunday morning breakfast, where you're getting 2 people occupying every room and they're all coming down for breakfast in the space of about an hour. For the rest of the meal periods through the week, you have large empty spaces. So if you have one of those kinds of restaurants, probably this impact could be a lot less for your hotel, because you've got the space to create those 4 meter diameters around the tables that you've got, and you're able to manage that and minimize the impact of this. So really important to understand, this is based on quite heavy utilization of space that is at that minimum distancing as far as your normal operation is concerned. But then you go on to saying, well, wait a minute, if I do have the demand for a lot of rooms, how do I manage that? Because I could do more with room service and having people make reservation times. I can do more with the restaurant space by making people book a time to go for breakfast in the morning, so that you can spread the timings of the breakfast impact. And then, as David was saying, bringing in additional initiatives like a grab and go offer of some form. So this is assuming we did nothing but just create the 4 meter diameters and nothing proactive to mitigate it beyond that. Is that fair to say, Mike?
Yeah, I think exactly that. This is a very much an overview level, because we're basically trying to work out the impact between the various decisions that are being made. And on a local level, of course, like I said, the C&B space, if this is theatre style, it has a whole different impact. Yeah. So if you're talking about cabaret or something, it's going to be the distance in between people it varies on a daily basis and on a room by room basis. But of course, when you average it over, these are the outputs of it. I'd say that what we would, some of the discussions I've heard are around, do you need to serve the guest breakfast? So if you're talking about breakfast timings, is it more profitable for you or more cost effective for you to serve breakfast to the bedrooms, or to extend the breakfast times in the restaurant so you can stagger the timings, or open up the C&B space for that extra restaurant to be able to kind of distance everybody out, but still serve them all at the same time. I think all of those angles need calculating, because ultimately, regardless which one of these decisions are made and implemented, there will be the need for creativity in all areas of the F&B operation in particular.
Mike, have you tried to overlay profit against this as well?
Not directly.
I mean, if you look at the contribution from restaurants, bars, but particularly C&B, the hit would be fairly dramatic.
Yeah, so we've got the direct costs for C&B, but of course there's a grouping of costs when it comes to F&B that you know, the net result of it you surely could, and again it'll make a lot more sense on a hotel by hotel basis. But yeah, you know, I think that again it may change the mix of beverage and food, as to, you know, the fact is that the bar, for instance, will be hit a lot more than the restaurants, and on that, you know, on that alone, does that mean that there's a flip of profits all of a sudden, and you need to focus on your food cost, where your beverage, you know, beverage cost has been maybe static for a few years due to the duty freezes. So there will be, you know, a fair few angles, I think, to consider there.
And I think what this highlights is you can actually, by looking at the social distancing and the rules, it highlights so you can actually work out your potential, and then it's how you fulfill that potential. You can give yourself a target. I mean, you can't govern what the governments decide on social distancing, but you can see what you can do. And I know Russell Ketz often talked about revenue per square metre, but now maybe what we have to introduce is revenue per square metre per hour, because now we have to use that time slot, we have to use the same full meal period, and the only way we can actually measure that and target that is to look at an hourly rate of use.
Yeah, exactly. I think the profit per square meter thing has been, you know, for a while, as you know, certainly from an investor's point of view, that, you know, that metric makes a lot of sense.
Yeah.
I think the hourly, we were introducing the productivity module to our website as well, where we're collecting hours. I think it's quite timely actually, because that, you know, again, the time and attendance side of things really will be quite important when it comes to, you know, how you are making those decisions as to whether it's better to have a short period of time, but you're using a, you know, a large part of the hotel, and like I said, delivering to the very much, or whether it's better to, you know, to have the kind of extended meal period over 5-6 hours instead, but then you can possibly keep the same level of staffing and do it all in one area. So there is, you know, there is a fair bit of creativity, and again, asset by asset needs to be considered. So
yeah.
But that's without really looking at the issue around, for example, with breakfast, is it buffet breakfast or is it plated breakfast?
No.
Because there are payroll implications in that.
I think buffets are dead, unfortunately.
Yeah, it's interesting. There are some markets, David, you shared with us some figures about Spain and some of the locations in Spain where the occupancy is coming back quite quickly. Talking to a mate of mine who works over there, they've still got people who prefer to have a buffet option available to them, and there are certain markets that want that. I don't think the UK market is one, the domestic market is likely to be embracing buffets, but it keeps coming back to an understanding of the demographics and an understanding of the market segments that you're looking at. Another person I've been speaking to recently with a luxury portfolio with hotels down in the southwest and lovely locations like that, they recognise that one of the key demographics for them is self-funded retirees or pensioners, and they feel much more at risk. So all these lovely figures you see about people who, you know, are 47% less likely to take an overseas holiday before the end of this year, and lots of people who are thinking of planning domestic travel, you need to think a layer below that to understand the demographics as well as the segmentation of what you're looking at, even down to things like the difference between drive market. If you're a hotel in Scotland that normally relies on its summer business, you may have challenges with how can people get to you from London in a way that they are prepared to travel. So there's a lot of different elements that are coming into this. But I think having these figures you're putting in front of us gives us the zero base. If we just put in the 4 metres and then did nothing and just took the hit, how bad a hit would it be? Okay, from that, now what can we do to improve that number? But you've got to have a starting point, and I think this is a great starting point.
Yeah, I think the only thing to add, which I think has been quite interesting this week, is to see from our, from the retail sector that of course opened back up in many circumstances this week, and the queues that you could see out of the likes of Primark, and some of the pent-up demand is there, and people were willing to kind of return back to some kind of normality quite quickly, and certainly in the leisure segment where people are just looking to get out and to do so. Yeah.
But again, it's looking at it, almost looking at your CRM system and seeing the age profile, the demographics, and all the rest, and going through that and assessing who's going to come back. I feel really sorry for hotel controllers these days. There's so many problems with actually trying to do a forecast. You've got so many issues to look at. Not an easy task by far.
No, and David, again, for me, from a finance point of view, I mean, my fear really is that, we're talking a lot about break even. We talk a lot about, how quickly we're going to be able to not only return to profit, but start making some decent money. But actually there's an overhang on the balance sheet probably for many of these operators and owners where you've deferred your taxes, you've deferred your the various payables that you had pre-crisis that they're going to be playing catch up. I think that there's also going to be an element of not just P&L, but what is overhanging on the balance sheet.
Yeah,
so
I mean, everyone's been managing their cash very, very carefully over the last couple of months. But of course, as you gear up again, you start running up your stocks, you're paying for all these conversion works. There's a real risk. People are going to be very, very nervous about making advance deposits, doing prepaid rates, etc. So you're going to have all that issue, and managing that cash going forward is going to be a great challenge, particularly without the meetings business as well, where that provides a lot of cash. Yeah,
exactly. Your model in your cash flow forecast modeling will look very different because of the, it's not just reflecting directly what's in the P&L. You've got to understand your business mix has changed completely. Your C&B deposits, which for many of the conference houses are their source of cash flow. That's the way that they stay afloat. So I think that understanding that and modeling it correctly will help you forecast, certainly from a cash flow point of view.
Mm-hmm.
So, Mike, have you got some more information that can help in this conversation around segments? And there you go, as if we planned.
Yeah, exactly. So, I mean, we obviously touched on this. It's with the only markets we really have right now, and it's a shame that it's this week. If it was next week, actually, our data will be fully available. I have some provisional data this morning, actually, that I've managed to pull from our sample, but we will release our May data next month, and that should help us understand from hotels that have been open, closed, and reopened, and how that how the different things move within that. One thing is the cost of having a closed hotel versus the cost of having an open hotel, and of course that analysis is nigh on impossible right now for the UK market in particular, because we'd be looking for hotels that are for a good enough sample of hotels that have reopened.
Mm-hmm.
So I'm hoping that next month that'll be something that or in the coming weeks we'll be able to provide. But from a segmentation point of view, there's been a lot of talk over which segments will return the quickest. Some segments literally will find it almost impossible to return immediately because of the international travel, the quarantine periods, etc. But I think there is a conferencing, of course, very different here when we look at the China market, which is our our initial market to be able to look at, where it looks like corporate, leisure, and bar are the three segments that have kind of returned quickest. Conference slightly behind that, and that is due to the ability in China, I guess, to be able to provide that. And some of what you were saying actually, Michael, is that the local offices who've who've had a conference or a meeting room, and traditionally it's been to cram, all of their 15 staff into this one meeting room. Now they possibly need 4 meeting rooms before they can get everybody there. So they would need to go into a hotel or a conference unit and be able to hold their conference outside of their meeting, their office space. So there is an element of uplift here. So if we look at the macro market of China, it again looks very different to if you look at, for instance, Shanghai as one market here. And you can see here quite clearly leisure has returned a lot quicker. The corporate and bar just slightly behind that. Surprisingly to see conference so closely behind, but if you look at where it started, conference was actually the largest segment in the sample that we have for Shanghai. So actually that really kind of makes a lot of sense that it's behind, and it's been quite heavily impacted. Tours and groups, of course, contracted tours and groups are either international or are relating to the large grouping of people going out and holding various either Smurf events or relating to conferencing. So I think that that segment is naturally going to lag for pretty much all markets.
I find it quite interesting with this one to look at the right-hand side and compare it to the starting point in the left-hand side. So your corporate at 5.8 is much closer to where the starting point was in December. The conference is the one that's taken from being the top of the pile on the left-hand side to being down at 3.5% on the right-hand side. So it's not just a matter of looking at how fantastic leisure has got to 8.5, but leisure's starting point was much, much higher, probably double that, whereas the corporate's got to 5.8, which is relatively close to where it started on the left-hand side. And obviously they're at least a month ahead of us. David, your thoughts?
Well, it'd be very interesting to split this between national and international.
Yeah.
I'm not quite sure that the Chinese corporate has quite the freedom of action that the European corporate would have, whether they could actually refuse to go or whether they'd be forced to go. That's my only question.
And this comes back to our earlier point as well, an understanding of your market for your property.
Yeah.
What is the most important for you? Is it inbound leisure? So if you're Edinburgh and the summer is really big for you, how much of that is UK domestic and how much of that is international? So there's a lot more to think about. Would we expect to have an opportunity for more domestic leisure? Well, potentially, but you really, as a revenue manager, need to have your finger on the pulse of the booking inquiries that are coming through and the pace. But that's been really helpful to have that broader view. Thank you for that.
Maybe with the leisure, we now need to break it down into 2 segments by age. Look at things like yeah, if you can have 70 and above and you're at risk, and below and you're okay. So I'm okay for another 2 years.
No, I think there's definitely from a demographic point of view, this is what we're talking about. We're talking about at risk or not at risk, aren't we? It's not necessarily the age thing, but the fact is that if your business was reliant on segments of the population that are at risk, then you are going to be impacted a lot further then, and you need to drive activities that focus on not necessarily on those people who won't travel and in this circumstance, but maybe on a new segment of and a new type of operation. I think the likes of Citizen M and these kind of more kind of lifestyle, targeted at the millennials, and I think that kind of should see a return quicker than those naturally, because they target that audience who are probably ready to get out and go and venture again pretty quickly.
I think just a final point from you then, Mike. I think the people who've joined this webinar with us have had a bit of an insight into how benchmarking on profit can help add some facts and figures to what are going to be difficult decisions in a fluid environment. Do you want to just expand on your thoughts of the role that profit benchmarking plays in that decision process?
Yeah, I mean, for me, look, as we started this, there's plenty of opinions flying around, I think that's a good thing, because we're all getting great ideas. I think there's a lot of creativity in these various discussions, webinar after webinar, with lots of different content, which is fine. But for me, it's all about fact, and I think that is that's why I left the industry, and well, I said that's not why I left the industry, but that's why I joined Hotstats. Because I think that the focus on fact is where it all comes from. Now, from the initial stages, I think as things start to move in the next couple of weeks, the benchmarking of online performance, for instance, so the initial stage when people are on your site, are clicking your website and seeing the initial kind of interaction with the potential customers, with the demand, is going to be a key factor in you being able to forecast and prepare yourselves. I think from as soon as the hotel is open, of course, daily benchmarking of revenues is vital in revenue management and tweaking your decision making and strategy. And from the output of it, I see profit benchmarking being vital on the basis that the budget is pretty much out of the window now, and rebudgeting is almost. We're almost at that stage where we're going to be zero-based budgeting, probably for many hoteliers for the first time almost ever. I think the likes of asset managers have, of course, been fighting for that for some time, but we're in a situation where that's the reality of it. And visibility of last year is again, this is a unique year. We're not going to be able to benchmark against last year for the next 2 years, because we're not just looking at last year being different to this year, but of course next year will be very different to this year, we hope. Looking at the live context of what your competitors is doing is the only way you're going to be able to see how you're performing from a hotel business model point of view, and whether your decisions are actually working. So
Brilliant.
It's kind of apt for me to say that, I'm sure, but also I think that's not my opinion. That's almost a fact.
Well, the ability to be looking at stuff as close to real time as possible, rather than relying on historicals, I think is the really key thing that I know David's all about as well. I might at that point just invite Jane to come back in, and I know you've been keeping an eye on the questions for us, Jane. Do you have any there that you'd like us to jump in on?
I do indeed. A couple from one of your very early slides, possibly even your first slides, Mike, about the graph which was expressed in US dollars. There was a query as to why it was in US dollars, and then a follow-up query as to what rate of exchange was used for those.
Okay, so the reason it's in dollars is because it was actually a slide, if I'm honest and open with you, it was a slide that I used for the international community 2 weeks ago. We've kind of regurgitated the same slide because it has the same story in a neutral currency. So if you run exactly the same slide for different countries, you obviously get the a currency neutral view of it. And the exchange rate, I'd have to check, to be honest. I think that it will be based on the last month, which would have been the end of March, end of April.
Thank you. And a question asking for clarification on the social distancing slide that you showed. Is the 1.5 meter diameter the distance between tables, allowing staff to pass between tables, giving them 0.75 distance between the two tables?
No, and this is the key consideration, is the fact that although restaurants are impacted less than the bar and the other operation, the other aspects of the operation that are normally closer together, they obviously have a lot more to kind of pack into that space. So the table is included in that kind of that distance. But of course, as a total space, you have a lot less to play with when it comes to being able to distance people. So yes, we're considering 2 meters in front and 2 meters behind, and any furniture or any chairs or anything that are kind of in between are included in that space. Yes.
Great, thank you for that. And then a comment here just saying that some companies are exploring booking the whole hotel so that they can control spacing themselves. So I'm not sure that necessarily needs an answer unless you've got a comment on that.
Yeah, I do. One of the things you need to be very aware of with exclusive use for any event that you're running is the impact on your shoulders, because you basically have to have the place empty beforehand and you start again empty. You have no stay through business. So if you're going to do that, make sure the prices and the costs support the impact on your business. There's a negative impact coming into an exclusive use and a negative impact going out. So make sure you're aware of all of that.
Okay.
Yeah, I've seen that with the car launch in Portugal, where they had the whole hotel taken over for about 4 weeks, but at least that was very, very good business. But before and after was difficult.
Great. This feels like another one for you, Michael Heyward, about revenue management systems. Does the panel have a view on whether hoteliers should exercise great care at the opening time when using revenue management software? And this questioner is concerned that an over reliance on the technology will result in some unnecessary discounting. I know there's been a lot of debate about this.
Absolutely. The important thing to understand with revenue management systems is they are developed to work around the world. David and I both work with some clients that are only open seasonally, and each year there is that conversation and discussion around when is the right time to open. Typically, as demand is building and getting stronger, your season starts earlier and finishes later. So revenue management systems are used to dealing with all of those issues around when do you open, how do you open. In our normal hotels in UK, we're not used to shutting down and then reopening, but there are lots of situations where systems do that. So the simple answer is have a chat to the guys that provide your system, ask how it is used in those areas where businesses do shut down for the off season, and how they can learn from that through their supplier to support those decisions.
Yeah,
Okay.
Michael, do you also think that there's an element of, from when you're looking at pricing, you need to consider your position as a business and what how much, for instance, how much cash you've got behind you to be able to kind of push that immediate. It'd be quite easy to go out and discount everything and take a kind of race to the bottom as it is. But for many hotels, holding their position in the market will be very important from a status point of view going forward. And if they're well backed, maybe they can take a 6-month kind of ramp up period and hit initially to make sure they maintain their position in the market. So
yeah, I think it's really important. Some of this is starting to sound very much like the classic Sunday night conversation. Dropping your price doesn't automatically create shed loads of demand for a Sunday night. This mess that New York got itself into after 9/11, when people started discounting quite heavily, and they very heavily went into OTAs, desperately trying to get some occupancy, but the demand wasn't there. You can't manufacture demand. So there is a degree to which you do need to be thinking a bit further down the track. But you can't control your competitors either. If you're the one holding out and everyone else is dumping, it can feel pretty lonely and pretty bloody. But I have to say, from business groups that I've been working with, if the market starts losing its nerve, stay on the higher side of that, because as the market drops away from you with rate, when it comes back, never let them have that back again.
Mm-hmm.
So if you can just be braver than the people around you, and then when the market comes back, never let them have that margin back again.
Michael, we've talked a lot about instilling confidence to try and get the customer back. And that really is the issue. I'm not sure it's about pricing. It's just trying to get people to leave their homes and actually go and stay in hotels. It's like what you say about rates Sunday nights. It's like when I had my hotel in Biarritz. Whatever I did, I was never going to fill up Biarritz in January with the winds and rains over the Bay of Biscay. So, I think the important thing at the moment is to get people to come back to hotels, to give them that confidence. And that's probably going to be based on the trust they already have in the hotels, because they stayed there historically. And once they get through the doors, the actions they see that the hotels have taken to protect them. That really is key. I mean,
I think one of the most important things, and I do quite a bit of work with students, both undergrads and masters, and they seem to find this very hard to get their heads around. There's a huge difference between price and average rate, because you can hold your price, and if you're able to secure a new market segment or grow a market segment that you haven't had a great share in before, even with all your prices staying the same, you're now getting a better share of higher yielding business. So I know people love to have discussions and debates around segmentation, but if you can add a segment or grow a segment, even without changing your price, you can get a higher average rate.
Yeah, yeah.
Because you're getting the right business through the door and more business through the door. So this
but
is
again, I'm gonna, I'll raise you on that one, and I'll talk about TrevPor, because TrevPor is really that, the idea of the other side of that is that, depending which segment you kind of are able to attract and change your business model to, the rate is only, the average rate is only one part of the TrevPor. There's still there's still the ancillary revenues to consider, and that I think right now is going to be really important.
And I think this is where good revenue managers have to be working the people connections. You need to be really working with the sales guys very actively. You need to be really working with the finance guys so that you can understand exactly what we've been talking about today. What is our absolutely crucial point we have to get to so that we're not losing as much money as we were when we were closed?
Yeah, yeah.
Even if I don't make it to break even, I can be losing less than I was when I was closed. It's painful, but it's less painful.
Yeah, exactly.
But, I mean, the key is visibility as well. By being open, by being out there, you're getting visibility. Yeah. Okay, you've got that loss, but maybe that loss is a marketing cost to get there and to actually start that ramp up. Because as we've seen before, you've got to get the activity up before the profit starts following.
And you can apply that point to the outlets as well as to the bedroom side of it, as we've already done today.
Yeah.
Yeah, no, I was going to say, David, also correct me if I'm wrong, but there's from a stakeholder's point of view, there's little value in a closed hotel as well. So getting the hotel reopened from a from an owner's point of view is also very important right now.
No, absolutely. I mean, my recommendation would be, excluding convention centres where it makes absolutely no sense because there's no business. I think for most properties, it's good to start the process up, to start working with the local community, the local suppliers, etc., getting the whole economy going, because that's the way we're going to get out of this.
Yeah, and also you're not looking to open at break-even point. You're not looking. Everyone understands there's going to be a ramp-up period. You're going to have to start that ramp-up period at some point. So I think that also needs to be in that consideration. That break-even is, when you're looking at when you're going to break even, it needs to be in the future. It's not like you're going to open and break even straight away, of course.
And it's also the reputation you get over this period, the way you treat your staff, the way you treat your, the previous customers, etc. We talk about a lot about valuation being EBITDA times the yield or whatever, but it's so much more than that. And I think that's another discussion we need to have after this period. What really is the value of an asset?
Great.
Coming back to James' question as well, using your revenue management systems. If a good revenue management system allows you to slice and dice by nationality or where people are coming from to give you more than just the stock standard segmentation, that's where a revenue manager can add greater value to these discussions and decisions.
Yeah.
Sorry, James.
Demographics.
Great. Well, we're coming very close to the end of our time now. There's quite a few questions coming in, which I think I will send to you, Michael, at Hotstats, because they're quite specific to different regions. So if your question refers to that, then we may be able to get answers to you afterwards. There are also There are also a couple of comments on the concerns of where would everybody eat if they do go away with the hotel restaurants. I know we touched on that. And then somebody else has picked up on David Bridges' comments about buffets not necessarily being dead, but they're presenting it differently. The buffet is behind a screen and then they're being served by the waiter. So there's still that element of choice. But if you have an unanswered question, and I know there are some unanswered questions, we will aim to get back to you afterwards and post those also on our website along with the recording of the webinar. But thank you all very much for listening. The advice and opinions shared today are general and should not be assumed to be right for every situation. Each venue is unique and the position is changing ever so quickly at the moment. If you need formal advice, then please contact me and I can put you in touch with any of today's experts or indeed any other experts in many areas of hospitality. A big thank you to Michael Heyward, Michael Grove and David Bridge for all of the valuable insight shared with us today. Please do visit the HOSPA website to see our crisis support page and also the positive news that we are posting during this time of the COVID-19 pandemic. You can also find recordings of all the recent webinars with the summary of the key points, and this particular one will be uploaded with the full view of the slides within 24 hours or so. Next week's webinar is about reopening as well, but from an operational perspective. I'll be joined by Duncan Osborne from Amadeus and Peter Ducker from the Institute of Hospitality. So please do register for that by going to the events section of the HOSPA website. But thank you all very much for listening. We look forward to seeing you again next week and being able to get together face to face, hopefully sometime soon. But thanks very much, chaps, for that today. It was brilliant.
Thank you.
Thank you very much. Good luck, everyone.
Take care, everyone.